Very good evening, everyone. Greetings and welcome to the first webinar organized by All Warehouses. The webinar is the start of a series of trendsetters from the industry of real estate. And who better to get all of this from, other than from the 5 prominent industrial real estate prodigies that we have with us from across India today. Well, what prompted us to pilot the webinar? The answers are perspective. We have experts from the top 5 major cities that contribute the most to industrial real estate. I for Industry 4.0, today's buzzword. Artificial intelligence, innovation, autonomous vehicles, various global disruptions, all this and the current world economic scenarios, making this the most exciting time to venture into new opportunities that the sector holds for us. L for leadership. Once again, innovation and technological capability are the unrefuted mantras behind an efficient line of leadership. As we would already know that over half of the Fortune 500 companies in the year 2000 have disappeared from the list by now. O for opportunity. What better than the land that's India, the nation that everyone has their focus on for this entire century. T for trend and direction. The knowledge that every investor, property owner, and broker is looking for so as to capitalize on these changing trends of the industry. Let me quote from one that I borrowed from Melinda Gates. Goals are only wishes until you have a plan. And it's undoubtedly the right time to put a plan and a thought into action. Moving ahead, may I request Pooja from All Warehouses to introduce all the speakers in order of the cities. Over to you, Pooja.
Thank you. Good afternoon. It's a pleasure to introduce our eminent speakers from different parts of the country. We have with us today from Ahmedabad, I'm glad to present Mr. Neerav Kothari, the Director at Godwin Construction, an industrial real estate veteran with 19 years of experience prior to joining the team of Godwin. Dynamic in his approach, Mr. Kothari sets the mission at the firm, looks after the execution of the project. His passion for advanced construction management technology has added the edge in Godwin's team and its philosophy. His vast experience has been key in designing the path for Team Godwin towards materializing their vision. Godwin has been the first movers in a lot of locations where the development was in its nascent stage and have contributed to the maturing of that particular industrial zone. This early identification of location by them enabled their clientele to seamlessly start operating from these otherwise difficult locations. In the year 2019, Godwin completed the development of 1 million square feet space at Mandal Vicharji Special Investment Region, marking a milestone in the company's effort to become one of the leading names in Gujarat. Going forward, Godwin will be covering more production and more consumption centers in Gujarat in phase 1, and then expand to other tier 2 cities and industrial towns where they can replicate their models of industrial parks with the entire social infrastructure. Thank you, sir, for joining us. From Bangalore, we have Mr. Sudarshan Lodha, an accomplished legal counsel in the real estate industry with us today. Mr. Lodha possesses extensive expertise in advising, drafting, negotiating, and vetting transaction documents pertaining to real estate acquisitions. You name it, and he's done it. Investments, financing, funding large-scale real estate projects in India. He's done all of it. He's also successfully handled investment deals worth $1.4 billion. Mr. Lodha is a co-founder of Strata, an innovative investment platform that makes premium commercial real estate establishments investments accessible to each and one. The vision of Strata is to revolutionize the way India invests in real estate. And Mr. Lodha is poised to become a leader figure in this space. Strata is just 2 years old and already has an asset under management of 950 plus crore. Welcome, Mr. Lodha. Happy to have you here.
Thank you.
From our own Nama Chennai, I am happy to introduce Mr. Sai Venkat Prasad, a serial entrepreneur, founder of Trubo, which he sold to Kemplast. Further, Mr. Sai Venkat developed and sold 1.5 million square feet on 120 acres at an international fund called Ascendas. This fund was one of the earliest structure PE deals in India for real estate. He subsequently developed and sold 0.5 million square feet on 35 acres of land at Flyjet. We take the biggest dream and make space. That's the tagline of Prime Space Industrial and Logistic Park. The company plans to develop another facility, about 6 lakh square feet, built to international standards. Conglomerates like HUL, Reliance, UC, Toll India, Honda Motors, Flipkart. These are just a few of the Indian and MNC companies that have chosen them their infrastructure and logistic partner. Thank you, Mr. Said. Happy to have you here. From Delhi NCR, we have Manish Jain of Pragati Warehousing Private Limited. Mr. Manish comes with an overall experience of 17 years, which includes 15 plus years of experience in RE investment strategy, asset management, valuation, and consulting. Prior to joining Pragati, he was associated with ASK, a boutique PE firm focused on residential and commercial investments. He's also worked with Knight Frank, Cushman and Wakefield in valuation and consulting, and he's advised clients across asset classes. Creating space for progress is the motto of Pragati Group that has delivered 10 million square feet so far to the marquee clients like Amazon, Flipkart, Bosch. Pragati is a pan-India warehousing developer offering grade A warehousing options for e-commerce, industrial, and 3PL clients. This entire team of 50 plus professionals are driven by a simple yet effective approach of 3 Ps: personalized, prompt, and professional. Thank you, Mr. Manish. From Mumbai, we have with us Mr. Hemant Prabhu Kaliskar, COO, Green-Based Industrial and Logistics Park. A JV of Hiranandani, Niranjan Hiranandani Group and Blackstone. Hemant Ji is a techno-commercial professional with 20 plus experience across global markets. Residential township development, mixed-use development, commercial development, malls, infotech parks, large-scale infrastructure, industrial logistic park. You just have to name it, and he's done it. He's delivered close to 10 million square feet of warehousing and industrial space and is currently developing a portfolio of 20 million square feet across markets. He has a bachelor's degree in civil engineering from Glasgow, a master's in finance, and not to forget, a certification from the Harvard Business School on negotiation and deal structuring, investment, business development, execution and risk management, M&A, valuation are his forte. Thank you for joining us today, sir. Last, I would like to introduce our moderator, Mr. Amit Damodar from Chennai. 20 years of experience in land acquisition under the brand name of Chattels Realty Consult, an established name in industrial real estate. He's the director, he's the mastermind of All Warehouse, which now offers an end-to-end service from land acquisition to design, to construction, to leasing, to property management. All in all, one-stop place. Moving ahead in the webinar, I would like to add that the audience can post their questions in the chat box on YouTube with a name, city, and whom they would like to address the question to. All these questions will be taken at the end of the webinar so that we will run through the webinar uninterrupted until all the speakers are finished with their stage. The stage is all set. It's just the right time for me to hand over to Mr. Amit Damodar, who will take it from here.
Thank you, Pooja. And welcome to everyone, all the speakers and all the audience. So it's actually time to get started. I would like to address the subject sequentially to set the pace for the next 60 minutes. Well, everything starts with ROI. So let's have the pertinent question addressed to Mr. Sudarshan Lodha of Startup, who's a master strategist in the sale of properties that yield very good IRRs and offer a good ROI. So my first question to Sudarshan would be, Sudarshan bhai, what are the ROIs in real estate? Do give us an asset class comparison in short.
Sounds great, Amit. Thank you so much first for having me. From a return standpoint, today we have deployed our investments across 4 asset classes. We've done an office asset, we've done industrial assets, we've done warehousing assets and retail. In general, from an uptake standpoint, we know our investors love industrial and warehousing assets more than any other asset class, purely with the whole volatility around whether it's in interest rates or multiple other things, especially what's going around in the macro environment level globally, etc. People are more concerned that I want stability of income. And there's this general mad passion for people now to own tremendous amount of land. So nobody now wants, okay, buy an apartment and make some UDS square feet of land. They're saying, yeah, let's invest in an industrial or warehousing which gives you acres of land, because they know that's the only thing which is going to appreciate over a period of time at the end of it. So our office asset portfolio is generated about 7.5 to 8.5% as rental returns, with upsides on capital appreciation and rental escalations on a year-on-year basis. Industrial and is one of our largest portfolio. Almost 50% of our portfolio is industrial, and about 20% portfolio of that is warehousing as well. So that is upwards of 8.5 to 9.5% as entry cap which we made, and that's the kind of return. But like I said, it comes with super stable long-term lock-ins, which people are very, very bullish about. And if you go by in depth and see that today in a warehousing investment, my money goes in land and my money goes in steel. Land is appreciating, rent is appreciating, and steel on the other hand is also, if you see a 10%, 10-year historic growth of the steel price, that's also growing at 5-6% CAGR year on year, right? So in true sense, this is investment in all practical purposes, the most rewarding from a yield plus the upside what you would make over a period of time, right? And retail on the other hand, we saw tremendous uptake in retail, and we definitely foresee that there is some saturation for brands in e-commerce, and retail is the way. Offline is one of the ways. If you see all the companies who kept selling the whole story of direct to consumers, whether it's Nike, whether it's Sugar, Mama, all these large brands are now opening 100, 200, 300 stores, right? Because at the end of the day, not all audiences are coming and buying online. Normal retail experience is also very important, but preferentially, if I have to put it up from an experience from our investor standpoint and returns, industrial comes number one, second comes warehousing, third comes office, fourth comes retail.
Great. So is this also because industrial offers you the highest ROIs?
So three parameters which are very critical, right? In today's environment, like we started the business 2 months after the pandemic, so you can understand that certainty and safety of investments was primary goal more than anything else, right? So yes, highest ROI number one. From a long-term standpoint, land value appreciation is obviously also the highest. Second and third, because these are long-term lock-in leasing, as long-term leases and lock-in assets, it's a very, very good stable asset, which is a good hedge to fixed deposit or to treasury bonds, which people are investing, or likewise residential real estate investment itself, right? So from that standpoint, clearly outlier from all the asset classes today is industrial warehousing.
Right. So what is the vision for Strata for the year 2023?
So we are rolling out our first fund. It's a dedicated 500 crore fund only for industrial and warehousing development. While in 2 years we have backed developers and we built a large portfolio. We intend to do that, not just developers. We're going a little backward integration as well. We've investing in a couple of PMC companies as well, and ensuring we can even help landowners who have the ability and don't want to trade their land by entering into partnerships with them and saying, okay, we'll handle the institutional side of your land by building a grade A park. You can own, we can own, and we can continue getting very competitive rents or have a better portfolio over a period of time. So that's one of the core focus, apart from our platform, which also has the ability to deploy about 500, 800 crores every year in industrial warehousing. So net, we are looking at about 3 to 4, or at max 5, if you are fortunate, if you can pull that off, is something we're doing. But at the same time, we've been talking to a couple of governments. Very interestingly, it have been inbounds where the governments have reached out to us and saying, can we figure out partnerships where we can offer plug-and-play solutions to companies who want to come from abroad and set up shops. While big believer of China plus one, I think government's push is the most critical element for us to be China and not China plus one, right? I never want India to be a number 2 option, thrive to become number 1 option for occupiers to come and set up factories over here, etc. So there's a long way to go. Without government push, obviously we'll not be able to achieve that. But having said that, that's a big focus area for us, especially on industrial and warehousing. More so 80% portfolio, like I said, is industrial focused. We love industry more than anything else. At the same time, seeing the whole trends, especially in the European market, etc. We've been very active to even propose asset-light solutions to companies who have bought their real estate and own their factories by offering them a good sale and leaseback propositions as well, where we are ready to pick up your entire asset on a long-term lock and lease with you guys. And eventually, you can be asset-light and you can use that money into growth of your business per se, instead of, parking money into a low ROI business for an industrial factory owner or an operator as such. So that's a key focus for 23, 24. And I hope it continues till 2030 till we become the 4th largest economy in India of the world.
Nice. Very, very interesting. So the takeaway is primarily number one, you are looking at a sale and leaseback model. That's a new trend. Very interesting. The other thing is that you were only working on assets that were already leased and were already giving you ROIs, and now that you're looking at land, that's also pretty interesting. So you're willing to tie up with landlords and investors and develop a park. So very good takeaway. So it's very clear, it's very evident that ROIs are the highest in industrial real estate. But when we talk about real estate, the primary raw material is always land. And in such a large and vast country, there are serious challenges in acquiring land. So we have legal issues, conversion issues, reservations, cost issues, time lags, and many not so to mention extras as well. So with great problems also come great returns, and that also holds apt for land. So land with problems comes cheap, but in the process of conversion and making it ready to use, time is a very critical factor. And that's what makes land expensive again. So people who can clear land and can make it ready to use seem to profit the most, is what I am assuming. So now that brings us to actually broaching the toughest aspect in industrial real estate, which are land acquisition challenges. I would like to take this question to someone who has faced this issue across India and has successfully maneuvered it well. Manish Bhai from Pragati, if I could have you answer the next one. Is land the best asset class in real estate in terms of versatility and return? And what's your take on actually acquiring land?
Thank you, Amit, for asking the trickiest question. I think Sudarshan answered half of that. Because land, it looks simple when you look at plain land, but when you go and acquire it, there are fractional ownership, which Sudarshan handles by selling the leased asset. Here we have to acquire the land. So, and then there are local challenges, and then there are language barrier here. So, that is where it offers the highest return, but then it is for different, life cycle of asset. Some individual might, when you look for a land, it's about, location, but then it should have a whole ecosystem of social infrastructure, connectivity, future growth potential when somebody is acquiring a land. And, return expectation also varies, for individual who is taking the risk at, agriculture stage, from an institutional player who will come once, you basically aggregate land and it is contiguous and he can then do his business on that. So the return aspect again changes. Then third comes, you have real estate cycles basically. So when you buy land, you have to look at, you are looking at a short-term investment or a long-term investment, because if you can't hold your land in a downturn, then, the returns are again different. But in long term, rand always appreciate and gives the best return. So, and that is where, land becomes the, you can say, the best asset class to invest.
Yeah. So, moving on to another large national player who understands the intricacies and differences in every market across India, of which no two are the same, even though being in the same state. I would like Hemantji of Greenbase to add in his opinion on what are the challenges with land, and as a national brand, what are the challenges that he faces in terms of land acquisition and at leasing in Greenbase.
Okay. Hi everyone. Good evening. Once again, I think this is adding on to the earlier two questions, but again, of a subject which is very pertinent, very important in context of what we are doing today. and thanks for raising this topic, because I've attended a lot of seminars and webinars, but this question has unfortunately not been addressed. It's been like lying there like a ghost, but for various reasons, no one has taken it up. Thanks for taking this up, Amit. See, we know there are several challenges. Like earlier, the earlier speaker said, but I would say that in terms of acquisition, the challenges would be aggregation, because see, traditionally we cannot compare ourselves to the other countries. China, the land is owned by the government. Yeah, I mean, government can come and step in tomorrow and allot you 500 acres. Here, we are a democratic country. The land has been owned by farmers. 1 acre, you will have like 20, 25, 30 owners. So that, I think, is one of the biggest challenges. And especially for this industry, what we are talking about, the industrial and logistics, where we're not talking about 10 acres, 5 acres, 20 acres. We're talking about more than 50 acres. My colleagues will agree that to set up a proper industrial or a logistics park, you need at least 50 acres and more. So the biggest challenge, I think, is aggregation. Local issues. Manish spoke about local issues, the barriers. Those are there. Change in land use is one thing that I think is one of the bigger problems, because after you have acquired the land, you got to go for a change in land use. The time that it takes for you to convert the land, for you to market it. So until, fortunately now, funds can buy agricultural land, but there is a time period within which you have to convert that to a marketable property. You have to do the CLUs and the conversion quickly. Now, the challenge over here is how much time does that take? Yeah. There is no uniform policy across the country where you can get this CLU done faster. If you take Bangalore, if you take Karnataka, if you take Gujarat, if you take every state has its own policy of conversion. So that, I think, is one of the larger problems, because I might have bought the land, but it's of no use unless it's converted, and then I can, otherwise, the fund is sitting, the investments is done, and there's a drag on the IRR. So that's one big thing. So each state has, again, it's different. So wetland conversion, then again, you have so many challenges in terms of clearing the land. There are ponds, there are water bodies, there are nalas, there are panchayat roads. You got to figure that out properly. There's no national or a global policy where all this information is available. It takes, countless man-hours plus a huge time frame to get all of this data properly verified, to understand what are the challenges. If you have a road running right through, it cuts through the property. It takes away all your efficiencies on buildability. So, but more than efficiencies is the data. Where do I get this data on a single platform, which is true, on which can be factually ascertained? So that's one of the larger problems. Right of ways, again, access. So look, if we have to, the government's vision and the policy is fantastic, to take from a 3 trillion to a 5 trillion to a 25 trillion. That's wonderful. I mean, whatever this government is doing is so nice. They have given a lot of focus on the development of infrastructure and logistics and industrial. So PLIs, we're talking about PLIs, we're talking about ease of doing business, we're talking about China +1. But all of that is meaningless if you don't have the basic ingredient in place, and that's land. So the time period, the period within which you need to get this land is very important. Otherwise, what's going to happen is we'll be talking about we being the next manufacturing destination, the China +1, China beyond, and the basic ingredient is not in place. So whilst we have the national logistics policy, the Gati Shakti, I think the government needs to do something in this regards, which will make it easy for developers to acquire land, and quickly, because the opportunity is there. It has to be grabbed quickly, and this is something I think the government needs to do. What is Hiranandani doing? So what we do is, fortunately, we are neither a fund nor a developer. We are a combination. Our DNA is like a combination between a fund and. So as Hiranandani, we have that capability, expertise to acquire large parcels of land, patiently do that. We're the first developer to acquire 200 acres in Powai when nobody knew about it. Then we went to Thane, we acquired 500 acres. We went to Panvel, we did 300 acres. Chennai did 600 acres. So we have that team. That's what we are doing. Getting the right land in the right place, cleaning it off, and then putting it on the platform. So I hope that addresses both parts of the question, which is the challenges and what needs to be done. Because I think challenges we all know, but what needs to be done is more important. So I thought, let me put this up. So maybe somewhere someone's listening at the right place and then doing something about it.
Absolutely, sir. Would you also like to add anything on challenges in leasing?
So, see, on leasing, particularly, I would say that there is not really much challenge, except the fact that earlier, going from experience, we had very few people who were doing this, who had jumped onto this bandwagon. Now we have, as Neerav Bhai and my other speakers would agree, that there is intense competition. So for leasing, I would say the biggest challenge is competing, and we need to, and the pricing. See, this is a low-hanging fruit. It's a B2B business. The margin of what rentals or what returns you can make are fixed. It's not like a B2C business where I can sell it at a premium. I have a brand, I sell it at a premium, I have a location. No, it doesn't work. The IRRs, the returns, the rentals that are available are fixed. So the challenge is about how to efficiently market it, how to efficiently put it across to customers. So there's a win-win proposition for all the parties. And more important is that if you're going to make some money or make some returns for your investors, this has to be a long-term sustainable. So getting customers to agree to having longer lock-ins, which will give a guaranteed long-term return or fund flow, is, I think, the two important or the few challenges that we face in leasing.
Right, sir. Very good takeaways. Thank you so much. So, moving on from one challenge to another, from land to leasing. I would request the technical team to actually show us a PPT, because the question moves to Neerav ji. Neerav bhai, do advise us on how in such times when we're facing job cuts and serious global talks on recession, do let me know what's your opinion on what is the present and future of the leasing business in India in this sector.
Thank you, Amit, for having me on this webinar. I could feel Hemant's pain when he was talking about land acquisition and the challenges that developer of national presence faces. I could really feel his pain. So before we get into the future of the leasing business in India, I would like to peek into the past. How has the industrial real estate developed in India? We were very used to having small godowns scattered all over the country. Then about 10 years ago, maybe a little more, we graduated to warehouses with racks, etc., put in place. And then today we are at a stage where we have distribution centers, fulfillment centers, all set up, very, very big in size and scale as compared to what we used to live with. So that's the evolution that we have seen. At least Hemant, me, and to a certain extent, Sai has also seen during their lifetime. We've all seen godowns, we've all seen warehouses, we have all seen distribution centers evolve in our lifetime itself. So having said that, what has also happened is how the logistics landscape has changed. Can you move on to the next slide? So while the earlier logistics business was simple transportation and storage. Today, it also involves a lot of inventory management, packing, labeling, sorting, picking. All of these services happen within the building itself. So, and that's what typically a 3PL company would do in its building. Today, we moved on from 3PL to 4PL and 5PL, which essentially talks of integrated supply chain management, inventory management, cost optimization, etc., etc. A lot of jargon which is involved in all of it. So keeping these two things in mind, there are some certain very clear trends which are there in the leasing business. The trends are that first thing is the building specifications are more or less standardized. I would say 90% of the specifications are standardized. You will have to do some amount of customization to fit in the occupier's requirements, but to a greater extent, it's standardized. Second thing is when a leasing proposition comes into a market, there is a clear preference for ready-to-move facility vis-a-vis a build-to-suit. There were days when build-to-suit was the only option because the industry had not matured, the industry had not grown, specifications varied. By and large now, because the specifications are standardized, ready-to-move is a better fit than a build-to-suit. Going forward, a lot of emphasis has to be given by all developers on an occupier-centric design approach. When you're designing a building, ground coverage is not the only criteria that one should look at. Any occupier who comes in, he will look at setting up utilities, setting up, things like scrap yards and parking areas and things like that. So we as developers, we will have to factor all of this in while we are designing our buildings. So the occupier has to be at the center of your design philosophy. That is something that one will have to embrace. Next point is there is a lot, like everything else, there is a lot of technology and a lot of innovation which is happening even in construction. We as developers, we will have to embrace this technology, this change, and kind of bring in the latest available technology and innovation into our buildings. Another point is there will be a lot more focus on sustainability in all the buildings. So not just solar power, but you will also have to work on how you'll minimize consumption of electricity during daytime, how you will work on reducing water consumption in your buildings, how much plantation are we doing in our parks. So all of this will have a lot more focus going forward. Another point is for all leases, quality of the occupier is going to be very important. It's not just that you should have an occupier in your building, but you should have a good quality occupier who will pay your rent on time and kind of keep the building maintenance and upkeep proper, so that it's releasable in future, so to say. And another point is that today, all developers will just focus on the lease rental, but there are a whole lot of commercial aspects that one can focus on while doing, these commercial terms. So things like security deposit, escalation, lock-ins, rent-free items, property tax, etc., etc. So focus more on the other commercial terms than just the lease rental. And last but not the least, COVID has taught us everybody that your lease agreements should be watertight. Everything should be thought through and factored in while you're signing a lease agreement. So a lot more focus has to be brought into the contents of the lease agreement itself. I remember when I first signed my lease agreement, it was a 5-pager document. Today we are at a 50-pager document. So that's how you will have to work on your lease agreements.
Interesting, sir. Thank you. Several takeaways are from here. So with so many challenges in land and leasing, now this brings a huge opportunity for service providers. Going back to Manish Bhai, having been a broker in the past, with these challenges in actually land and leasing, what do you think is in it for brokers across India?
Thank you, Amit. So, most of my time goes in this only right now. We are looking to, acquire land pan-India basis. And the biggest challenge is to find the right person who can aggregate the land, which Hemant has pointed out. See, everywhere, and instead of calling these, term broker, I will say these are the facilitators, and they actually do a great job so that we as a developer can buy that land, aggregated land, and then process it. The CLU challenges are secondary, because the first challenge is to get the right land which is aggregated with all the issues sorted. And with these facilitators are not new; they are existent from generations, and they have helped to strike a deal. And in the current scenario, because the institutional money can go after a certain point in time only, so there is a finance requirement, there is a fund requirement. These facilitator who gets that and ensure that land is aggregated. And there is a whole lot of a requirement to convince the other parties to give that land, and they aggregate. And then there are structuring challenges. So these guys understand that as well. Third, these guys are, first of all, they are doing their due diligence because they are also in a business of land aggregation. So half of the problems they solve before it comes to market. So, you can say it's a sub business in industrial real estate, where because the lands are more than 50 acres or plus. So I say they will remain, they will, do a better job, they will get better at it, and we will be facilitated by it more, because we can't take that much time to aggregate land, which might take 6 months or a year. So for industrial warehousing, this is going to be a bigger play for all these players who are doing the land aggregation.
Manish, I just want to add one more point, which I skipped off on the earlier question, is that and just reminded me when Manish spoke. Whilst we talk about, this is a little contrary to what we're speaking, but one of the biggest challenge, or maybe what needs to happen, is the judicial reforms. Because I was just reading, it just occurred to me that I was going through someone's presentation or on YouTube or on LinkedIn, and what he said made real sense for me. That our judicial reform, our judiciary needs to get a complete overhaul. Archaic laws which have been bestowed upon us by our colonial rulers, and we're just going through the same thing. Someone told, he mentioned that to overhaul these judiciary, we need an investment about 10,000 crore rupees, which is just a small pound of money in context of what the whole thing what the landscape can be changed. I'll give you a simple example. Anyone can put in a frivolous claim on a land and have an injunction on suppose, like I have 50 acres and there's a small frivolous injunction or a claim even on a 5 acre, which is right sitting in the middle. There's hardly anything I as a developer or as a fund, or at least we as developers have good experience to deal with this. But think about a multinational company whom you have invited. to come over to India, set up a plant, and then suddenly there are people sitting on the fence trying to make a quick buck and just put a frivolous claim. Now that gets, if that gets entered as a we call it as a boja in local language on your 712 or a mutation, I mean that to settle it off legally will take, I can't even imagine how much time it would take. And if the company opts, which they cannot because of FDI regulations, and we should not say all these things, but if they opt to settle it out of court, I mean, just imagine what that costs. So all of this needs to change. And title insurance. Title insurance is, we need a very, very strong, I would say, a robust title insurance product. It's time for someone to step in, the insurance companies to come in, step in and provide a robust product which guarantees on the title, because do whatever you do, whatever amount of due diligence and degree and deeper and very, very minute granular, but still there will be some problems, and these need to be protected with a robust title insurance product. Just wanted to add this as a corollary to what we spoke earlier.
Very, very interesting, sir. This is much needed because, MNCs require clarity. So, like you said, when you're talking about China or a replacement of China or, beyond China or China +1, this kind of clarity for a foreign company to, come and put in money here is actually much needed, most needed, in fact.
And I'm really sorry if I'm sounding very emotional and very passionate, as Neeraj said, but it's coming straight from the heart, and it's really something which is really causing a lot of grief and pain as we try to acquire more and more land.
Absolutely, sir. So going back one step to Neeraj. Neeraj was talking about MNCs coming into India, and we have to have a customer-centric approach while you speak about a very practical approach. So this also brings a lot of changes in the specifications. There's a lot of changes in compliances. Moving further on compliances and specifications, I would like to ask Neeraj, what are the new specifications or something new? What's the role of specifications and its connection to ROI today?
So it's very, very simple. That the more sugar that you add to a sweet dish, it's going to get sweeter. Similarly, the more you keep adding in terms of specifications to a building, it is going to become more expensive, and then it starts affecting your ROI. Today, the standard specs for a building is 12-meter height. If for a manufacturing building, I'm talking about, is a 12-meter height building, 5 to 6 tons per square meter floor load. You do your entire fire fighting systems like fire hydrants, sprinklers, etc. And insulation, skylights, etc. All of that, if you do, and for manufacturing, also provision a 20 to 30 ton EOT crane movement in your building. If you build all of this, you kind of then become ready to for any manufacturing facility to be set up in a very short span of time. For the warehouse building, the specifications remain the same, just that the EOT crane movement goes away, and a super flat floor becomes critical. FM2 floor, because racking is then going to happen in these tall structures, and you would need an FM2 compliant floor. So these are by and large the broad specifications that are working in. The bigger mistake that people do is that today, let's say I'm developing a building, my customer is saying that I need only 12 meters or 9 meters clear height. Why don't I just go and do a 9-meter high building? It saves me $200 to $50 a square foot vis-a-vis a 12-meter high building. My customer is only asking for a regular VDF floor. Why should I invest on a FM2 floor? These are thoughts which cross everybody's mind when they are developing the building. But what we don't realize is that these are buildings that you build for next 20 years, 25 years, 30 years. And in those 25, 30 years, your building should not become obsolete in terms of specifications. I remember that the first lease that we had done in 2010, the standard building height that was prevalent was 7.5 meters. Today, nobody touches a 7.5 meter high building. None of the occupiers would go and touch it. Today, the gold standard is 10 meters or 10.5 meters. And soon 12 meters is going to be the gold standard. If you're not building 12 meters, your building will be obsolete in the next 7, 8, 9, 10 years. And what would you do with that asset going forward? So you saved that 100, 150 bucks today, but then you reduce the lifespan of your asset by 10 years. So it's a judicious call that one will have to take on what you keep as specifications, even though your customer is asking for a lot less. But you should keep in mind that these are the provisions that I will go ahead and still do it to keep my building relevant for the next 10, 15 years, 20 years. And that's an additional investment that will affect your ROI today. So let's say if you were leasing something at a 9% yield, and this additional investment will bring down your yield to, let's say, 8.5%. But that 8.5%, which lasts you for a good 25 years, is much more valuable than an 8 or 9, which is going to last you for 10 years. So that's the catch that every developer everybody goes through. And another thing is, in terms of specifications, is people don't understand that the heart of a building, of an industrial building, is the clear height at eaves. But the soul of the building lies in its flooring. The rest of it is just a covering to the flooring. And there is, everybody tries to save a little bit of money on flooring. So that is something that one should avoid doing it. Spend a little more on the flooring, make it a little more robust flooring. You will spend that 20, 30 bucks today, but it will last you a lifetime. That's another thing. And like I mentioned, importance has to be given on utilities and amenities in the buildings. I'm reiterating my fact, but that is key. As a developer, don't just go out and say, if I get a ground coverage of 60%, I will go ahead and do that 60. You need a lot of space outside the building to set up chillers, to set up air receivers, compressors, DG sets, the full fire, the electricity utility, and all of that is required to make your building relevant and compliant. So today you may be compromising on your ROI, but your longevity of your building is what matters more.
Sure, sir. Thank you so much. Just calling out to Sudarshan. I actually think Sudarshan has another webinar to attend at 5 o'clock. He's the webinar man. So, Sudarshan, would you actually give us your final words before you exit now?
Awesome. Thank you, Amit. I just want to add a couple of points, to what Hemant and Manish were talking as such, right? Apart from, government's push to make land, the raw material available, etc. I think, like I said, our focus is industrial assets. The bigger focus should also be on reformation of labor laws. I think that's the bigger deterrent and non-availability of land, power, etc. How easy it is in China. Paul, if somebody has worked for 5 years, you pay them 1-2 months salary and they can't file a case, whatever, you can just serve them a notice, pay them the salary. If they work for 10 years, you probably pay them 1 year of salary or 6 months. If they work for 20, you pay them 2 years of salary or a year. And, it's just a straight walk-off, right? So that is honestly the biggest game changer. While we can always be China plus one, I'm a firm believer we should be China, and why the second option. A lot apart from land issues, etc., is also on labor reforms, which is very, very critical. So, so as Hemant Bhai mentioned, that hoping through your platform, we get to the right years. I hope even labor reformation is also one of the years which people do look at. While I understand it can be a different element, especially from a political standpoint, but for the growth of the economy, that's a very, very critical aspect. So for our push to grow large industrial facilities, this is also one of the key elements which makes an impact on future decision making. So thank you, Amit, for this.
Thank you, Sudarshan. Glad to have you with us, and feel bad letting you go so soon. Sure. So we'll catch up again after the webinar.
Thank you.
Thank you. So now moving on to a gentleman who's been sitting very silently on the sidelines, and a person whom many of us idolize here in Chennai, Mr. Sai Venkat. Sir, I have a question for you. It's an opportunity for brokers, can also mean a huge opportunity for landlords. Land that is used only for industrial today, 25 years hence becomes residential and commercial land with great value. And actually landlords can earn rentals until then. So pertinent question to Mr. Sai Venkat Prasad. What is the life cycle of an industrial asset, and what opportunity does it bring to an owner after 25 to 30 years?
Good evening, Amit. Thanks for this opportunity, Amit. So let me take, Chennai has an example here for your question. So Chennai has been one among the oldest industrial city in the country, especially in manufacturing and automobiles. We have been there for more than 50 years or 60 years now. The value of the industrial asset has always been growing on time to time. Historically, I have noticed that the industry and the warehouse asset or a godown asset, whatever it is you call it as, keeps moving away around 8 to 10 kilometers every 10 years. So that has been the cycle. It keeps moving away around 8 to 10 kilometers every 10 years and giving way for expansions except for the government notified area. And this gives way for other developments like residential and commercial development. So I personally feel, investment in industrial and warehouse assets are definitely attractive for either a long-term or even a short-term investment. Another great advantage, on any industrial asset, if you're able to get a very good quality tenant on a long-term basis, a capability to raise debt with any financial institutes and other thing will not be a challenge whatsoever. I therefore foresee, an investment in industrial or warehouse asset, long-term or even a short-term, is a great idea.
Great insight, Sai sir. So further to you, you've been a serial entrepreneur. So you started off with a pipe company which you sold, and you've done so many developments that you entered into. You have actually brought it to a good level, and you've actually sold it off, including one of the first investments that Ascent has made over here, buying a ready industrial park. So as a serial entrepreneur, you actually seem to have found your space and comfort in actually real estate finally, especially industrial real estate. What do you think are the factors that actually led to this?
Subsequent to our exit, on manufacturing, we have been in manufacturing right from 1982 onwards. Of course, it was my dad's business, and then I took it on in 1994. Then we exited the business in 2006. So as Nirav was talking, that was a period when the godowns were getting transited to warehouses between 2005 and 2006. And that's where we found, there's a lot of opportunity, especially in warehousing and industrial and logistic park segment. By then in 2006, there was no concept of, logistic park, especially in Chennai. We found there are a lot of challenges for any MNCs to come and set up the warehouses or manufacturing facilities. And I personally feel they are not equipped to do so. The challenges are in the form of, as earlier speakers were talking about, acquiring land, legal due diligence, zone conversion, CMDA, PWD, all these. Considering all the above challenges, we felt it is close to impossible for anybody to come and set up the manufacturing industry or even a warehouse, within any city whatsoever. And we therefore felt, there are a lot of opportunity in this segment because most of these tasks are of acquiring land and conversion and building or whatever permissions and all these things. These are all basically regional based. So it is really impossible for anybody, and it varies from state to state or sometimes even from city to city. So we therefore, I thought, there's a lot of opportunity in this segment, even today for a quality facility, so that, the tenants can focus on their core business and leave the development and acquisition of land and all this to develop for people like us, So we are there in every cities and, we can take care of that and let them focus on their core business. So that's why I always feel investment in logistic park or warehouses is definitely a
Thank you, sir. Thank you for your inputs. So we have a question. We have a place where anyone can ask us questions on the YouTube live, and we'll bring up all these questions at the end of the webinar. So moving on to the last part of the webinar that most people are waiting for. It's the topic of funding. Let us start with Hemant ji. So pre-lease versus build-to-suit versus speculative investments. How do you maximize ROI and how do you reduce risks? Well, this is a very contradictory and actually tricky question, but how do you make the best of the situation over here?
Sorry, I was on mute. Oh, well, I mean, you're famous for asking tricky questions, and I know that, and I was expecting something like this, having dealt with you on my leases. So you have lived up to your reputation, Amit. It's a very, very, I would say the very sensitive question that you have asked, but let me break this up into two parts. You asked pre-leased versus, again, build to suits and speculative. Now, honestly, there's no right or correct way to do it. Everybody has their own way of doing it. Nirav might have his own, Sai might have his own. He's built hats off to congratulations to Sai, because I really wanted to meet him at some point, because we always knew that this was the first investment that was sold. So Sai, congratulations on that. Manish. So each of us would have their own strategy in terms of how we want to do development. In my previous organization, I remember my unfortunately I can't take names, but we always used to think that everybody does that. You don't want to take a risk, because at that point of time, this was a new industry, this was a new segment. Everyone didn't just want to test how this whole product develops. We were only doing build to suits because we didn't know how the market would react, how much would be the demand, what rentals would come. So everybody was trepid in terms of how they want to scale up the business. And then I remember one of our founders and the chairman, he used to be from US, he came and I was giving him my annual report. And then he said, Hemant, what I want to do is stop this build to suits and this thing. I want to do speculative. I want to have a shoe. He said, I want to have a shoe for every size. 2, 3, 4, 5, like you have it in the showroom, Bata. I have a shoe for every size. I have a product for everything. So make product standardized so that you can, between an industrial and a warehouse, or even for a warehouse. Nirav said about 7 meters, 8 meters, 10 meters, now we're to 12 meters. I think Flipkart has built a building in Calcutta, which is 30 meters. And just think where they've gone, very narrow aisles and the whole mechanization of retrieval of product from the racks, completely computerized, drone systems coming in, artificial intelligence, you name it. So the one thing that we did was to standardize the building, to make it so that, tomorrow, even if I build it, the larger segment could take it. So, and today it is all about having the product ready, because in warehousing, no one's going to wait for 8 months, 9 months for you to build your product and then come in. It's like, I need it now. Do you have the space ready? That's it. And I take it. And that's probably where the opportunity lies. You got to trust yourself. You got to have faith in your team, in your product, in your location where you are, that you will be able to lease it out. But that's a brave call, but I think that's the right call. So now, build to suit is something different. Build to suit is primarily for the industrial segment, because you do whatever standardization in your buildings, but for an industrial facility, it 50% of the time it won't work, because take a simple example, cranes. I mean, this is something that everyone struggles, because industrial customers need a specific type of crane. Now, Niro said about making your buildings ready for the future. How can you make a building ready for a particular type of crane? It's not possible. The grids, the tonnage of the cranes, where it will operate, how much it will operate. So whether it's a single crane on crane, it's just not possible. So that's where the build to suit comes. And I think we have decided what we do is we leave reserve a particular space or an area for doing that build to suit. Now, pre-leased is always going to happen. That speculative. Today's mantra, I think, is to build space, have it ready, and then just market it properly so that customers can take it up. Second part of the question, return on investment. Now, again, how do you maximize your return on investment? $1 million question. I mean, I wish I had the right answers, but all of us have to make money for ourselves and for our investors and for our stakeholders. So we try to do it, and we try to learn from past mistakes. So one thing I think is very important is to diversify your portfolio. Eventually, everyone is looking for exit. And if your portfolio is diversified, you can't have all warehouses, all from one industry, all from one, all maybe one big client. You know, just imagine what might happen today. You've seen what happened with the e-commerce. We had the COVID wave, and then every e-commerce player was looking to take space. And then suddenly COVID went away. We went back to our traditional ways. E-commerce has slowed down. I would say not gone away, but slowed down. So a lot of leases are getting cancelled. So you need to ensure that your portfolio is diversified. You have got different mix of customers, different mix of industries. That is one very important thing. Another thing that we are doing is doing something different. For many, COVID was a challenge. We decided that, well, there is COVID. What do we do about it? And our philosophy at Hiranandani has been to build townships. We do integrated developments. We don't just build one building, two buildings. We build a township. And our industrial parks have been an extension of our township. So we've got, wherever we have been, we have a township besides our industrial park or a logistics park. So we provide everything from affordable housing to schools, to a hospital, to premium residential. So the walk to work concept, that's something that what we are doing. So Amit, you have seen what we have done in Chennai, and we're replicating that across our township or across our industrial projects. So we actually, there in Chennai, we've leased close to 3 million square feet in the last 2.5 years. And where people can actually, alongside their manufacturing facilities, can have all their workers, all their blue-collar staff, white-collar staff, even the CEOs and CXOs of few companies have taken residential apartments in our complex. So people actually walk to work. And I've seen that. I stay at our township in our guest house, and I can see actually people walking. And you can see your near and dear ones right from your balcony, actually from your house entering into the facility. So this is something unique that we are offering. I think, of course, you won't get any premium rentals out of that. So return on investment, no, nothing. But it makes it actually ensures that the customers that with whom we have signed the contracts will stick around with us for a long time. We have sticky long-term contracts. We have a long-term guaranteed stream of income which is coming in, which is very important when you go in for a REIT, which Sudarshan unfortunately is not here. He's done. Sai has done that. So I mean, the valuations are going to be how strong and how diversified your portfolio is, how longer lock-ins you have. And I think the last one, which everybody is betting, is on cap rate contraction. I mean, I hear everybody saying cap rate contraction. So I mean, everyone's hoping that would happen. That would give us your return. But those are things which beyond your control. That will be driven by the market. That will be driven by the economy. We hope that there will be a cap rate contraction. But something that is within your control is this. Is what I said. That's my 2 cents on what you asked.
Great. So very interesting. So you mentioned about speculative being the way forward. Would you still stick by this? Maybe in Q2 of this year, people are talking about the global recession, and it's finally touching the Indian doors. Of course, it's more vastly seen in the Western world. It's not too visible out here. But what do you think of this? Making speculative buildings, are they a little risky going forward this year?
See, again, I mean, you can't just blindly do something and replicate it everywhere. Everyone can't do the same thing. We are doing it. It has to be as per the situation, as per the market, as per the location that you're in, the geography, how much of a product you have. We have got 250 acres at some location. We've got 100 at some location. At Nashik, we have got 75. We're doing a different strategy over there. So again, there's no one right or correct way to do that. But I think it's all about understanding the situation, understanding the market, looking at what the current trends are. I mean, look at Davos. What's happening? Is there investments going to come? Do we see any? If I take at Pune, or if I take Chennai, or if I take let's say Bangalore, do I see government signing up investments? Do I see the infrastructure happening fast, which will give me a pole position in terms of having my product? So it all depends on several factors. But currently, if you ask me, at some locations we're doing with a speculative.
Right, sir. Thank you so much. That was again, tricky, and you actually answered it well. So just to get the perspective from Manish Bhai of Pragati, what are the sources of your funding? Are they family funds, platform funding, and how else do you think that a transaction can be structured? How have you done it in the past, and how are you doing it in the future?
No, so I mean, just to take that on, currently, see, we have an institutional funding where we are going ahead. In past, we had a mix of family and HNI funding. And see, all these aspects of institutional funding also, as I said, here the aggregators and the HNIs plays a role where they aggregate the land, and then only institutional money comes in when it is aggregated, contiguous with all the issues which the company thinks can be taken care, then that institutional money goes. But then the return expectation is different for your HNI or individual investor than the institutional investor. So, and the now if you see, the landowners are also want to take make participation in the rental yields. So there are new formats which are coming up. They also want to have an area share. So they take their boxes and keep them for rent yields there. So there your upfront money requirement comes down, and you make that asset ready. So that's another model. Then there are JV models where what you do, there are you do bottom line share or revenue share depending on the other party's interest. So that is another model where you look for the asset which is there. Now the location is good. You can structure a deal there. You do that. Then there are different models. If you are becoming a pan-India player, you want to participate or partner with local strong individual player who as we discussed over 1.5 hours now, the expertise required in every market is slightly different, or you can say is totally different in that sense. So, you participate with them and structure that how, the money requirement can be managed. We bring in equity, they have a construction expertise and the conversion as well as approval expertise. So it is a win-win situation for both the parties. So, so it is like not a single formula. And at the end of the day, you have to sit across the table and structure that. So, and because the regulation plays important role in your structuring as well. So, what money you can take at what stage, that is also driven by the current regulation which we have across country.
Right, sir. Thank you very much. Very, very interesting, new structures coming up. So, landlords don't need to, sell their assets. They could, benefit from it long term. They could give it out to you in phases where, they could have an area sharing. Today they could, perhaps get 11%, 12% yield and then flip it in the market later at a 7.58%. And cap rates also, going to be declining over a period of time. So landlords tend to benefit long term as well. So yeah, very, very good takeaways. Thank you so much. Moving on to Nirabai, I would just like to understand, Nirabai, from you, what is the route of funding that you have taken for your company?
So we began with family funding. That's the starting that we did with, and then we got on HNIs at some point in time. Typically, what we do is whenever we go and buy land, it's our own equity that we put in. Because in India, the maximum risk that is involved is in land itself. So we do not take any money, external money, till such time that the land is cleared. We also look at project funding or a project finance from banks if there is an LOI already in place. And once the project is built, we definitely look at doing an LRD. That brings in a lot of cash in one go, which is invested in subsequent buildings. Now the fad today is definitely looking at private equity for funding. That's something that all small players or all regional players will have to look at private equity funding, either project-based private equity funding or a platform-based funding, and we are evaluating both, either project-based or platform-based funding going forward for all our projects. So that's our take on funding projects in the short run, and in the long run, we are definitely looking at private equity funded projects.
Great, Nirabai. Thank you so much for your brilliant insight. So it's been an absolute eye-opener for us all. We have lost track of time. We initially planned to have this for an hour, but it's an hour and 20 minutes. So yeah, but we've discussed and discovered a whole lot more. So the audience on YouTube, thank you very much. You have actually crossed about 300. There are a lot of questions that you posted. I am seeing a lot of questions coming into me personally on WhatsApp as well. So we just move on to a few Q&A. The first question that I have over here is from Mr. Rajesh Sadhwani. He hasn't addressed it to any particular speaker. So he has asked that under this inflationary pressure, it is very difficult to get desired entry yield. How do we overcome this? So, Nirabai, would you like to answer this question?
Sorry, can you come again?
Yeah, so
missed a little bit.
Yes, so a friend of mine, Rajesh Sadhwani from Bangalore, is asked under the inflationary pressure right now, with the input costs of materials going so high, it is very difficult to get desired entry yields. So how do we overcome this? Now, a similar question is also asked by another gentleman called Suresh Kumar. So he says that rentals are stagnating while the investments on the assets are rising. So, what is your take on this?
So they very rightly pointed out that yes, there is very strong inflationary pressure on all input costs, and COVID made it even more difficult. There was scarcity, the costs were high, and on the other hand, the rentals are just the same. And occupiers, they were also under pressure, and they are continuously under pressure to reduce costs, whether be it a manufacturing company or a warehousing company. They are always under pressure to reduce rents. So it's a tricky situation and a tight rope that one will have to do. As a developer or as an asset owner, you will have to make a judgment call based on the quality of the occupier. That should I take a hit on my expected return for better quality of the lease or better quality of the occupier, or should I stick to my rental and maybe risk losing that customer 3, 4, 5 years down the line? So that it's a tightrope, and it brings back me to a point which I made during my presentation, that to overcome this, you should also look at other commercial terms. You look at your security deposits, you look at your lock-ins, you look at your rent-free periods, etc. And then how you can go back to a bank or a NBFC to get a lease rental discounting based on what you signed up for. So you'll have to work around all of this to meet your return expectations that you would have set for yourself.
Absolutely, sir. So the other question also is for you, directly at you. They're saying that you have advised us to go so high on the spec. We don't even look at a 7% ROI if we go so high on the spec, because the rents are not increasing, and we do understand that the building life is enhanced, but an entry level spec is actually a challenge. Entry level ROI is a challenge right now. So
and that will continue to remain. I mean, it's something that, as I mentioned, you will have to take a haircut on your expectations, yield expectations today, to kind of ensure that you have longer longevity of your building. Otherwise, you will end up with an asset which 10 years down the line nobody wants to touch, and then you barely recovered the investment, let alone forget returns on those investments. So it's a tightrope, and one will have to compromise between the quality of the customer and the quality or the specification of the building. So there's no one recipe for everybody. You will have to take a judgment call based on the location that you operate in, based on the kind of market that you are in. If you're in an auto-centric location, take a call that way. If you're in a chemical-centric, if you're in an FMCG-centric location, your judgment call will have to be taken based on these factors.
Absolutely, sir. Thank you very much. It's 5:26. We'll be taking questions only till 5:30. There's another question directed to actually Hemanji. So the question goes that Hirandani is known for making palatial buildings and very beautiful structures. So does the ROI work for you in actually industrial and in warehousing?
Got it. Okay. So yes, we are known to make palatial buildings with themed architecture, which gives you the feeling of being not in India. Our Powai or our Ane properties or wherever we go, we have, it's all about quality. It's all about a theme. Thirdly, whatever theme or whatever quality, I think is something that is we will not compromise. And And as rightfully said by all the speakers, Sai, Nirvai, Manish, and Sai Sudarshan, that today no one can compromise on quality. We're talking about being the next destination for manufacturing. We're trying to scale up our logistics index and take it up from 14% of GDP to 8%. So all of that will happen only with being quality conscious, making products which will compete with the global world, which will ease the way of doing business and make us more sharp and agile. So quality, I would say no one will compromise. Now, in industrial, it's, as I said, it's a B, and logistics is a B2B business, not a B2C business. So we, already said that you'll have to draw that margin or line in what kind of palatial or beauty or quality or whatever you want to give, and that we all know that this has to be long term. Now, return on investment is a very sensitive topic. Everybody who is going to put in money, whether it's an HNI, it's my own private equity, it's a fund, it's whoever it is, you need to return that investment as fund managers, as asset managers, as development managers, whoever in whatever role you are. So the whole idea over here is about being patient, believing in the future. I'm very bullish that when we started this business, Neera would know, in 2009, people used to laugh at me. When we used to quote rentals or whatever, we were like, because everything that was there we used to call that as farmers' warehouses, because those are godowns. And that warehouse or whatever is slowly now being accepted. Even if you quoted 18 rupees on those times, people used to laugh, you're a crazy bugger, what 18 rupees? I'm getting in Bhiwandi at 10 rupees, 18 rupees. Slowly, that part is getting wiped out. People are understanding that this is the right rental. It has to be a win-win situation for both parties. The business has to make money for the warehouse, your customers, for your warehouse guy, for the industrial. It has to be a long-term sustainable, because you can't, if you have a product in the right market, you have demand, nobody has inventory, it's just not possible that you command a premium. Those who have done it have fallen up, because once the lock-ins expire, or if you find a cheaper alternative, people will move. So you got to be very sensitive to this part, but at the same time, you got to make some money on your investment. At least I would say you got to service your debt. If you can't service your debt, then it's a ballooning effect. You will fall at some point of time. So those who take those risks of just signing left, right, and centers because of whatever pressures they have will have a problem. So I think that's where you have to be. You have to be very sensitive as to how you close a transaction.
Thank you, sir. The next question is actually directed to Mr. Sai Venkat. It's a question from Mr. Kiran Mehra from Chennai. And Kiran says that what should be the minimum size of warehouse that I should build for a grade A tenant, and what should be the land size for the same?
In Chennai perspective, the minimum size, I'd always prefer, it again depends on the area to area. If you're looking at northern part of Chennai, I would say for a grade A tenant, not less than 50K. So 50,000 should be the size what you're looking at. And if you're looking at the southern part of Chennai, it's close to probably around 60 to 70K. And I always, suggest, the ground coverage should be only 0.5. For a grade A tenant, you can't go anything beyond 0.5. And the quality of the specification, as everybody were talking about, we've always been talking about ROI and other things. I think this happens to any industry on time to time. I think this has come for the warehouse industry. Yes, we are in pressure for margins, but I don't think you should worry about it. This is a long-term business, high capital intensive business. I think as everybody, all the speakers were talking about, the quality, the location quality plays the major role. I think there should not be any compromise whatsoever on the quality of the building. And definitely, and people forget about, the quality of the tenant. So that brings in the value actually. It is not about the rentals and other things. You can always compensate because it's going to increase at a rate of 4 or 5% or sometimes even 6% year on year. Going forward 5 years later, you would have seen the rental going up as it is with the same agreement. I think the quality of the tenant, quality of the specification is more important. So that's it. 50,000 should be the bare minimum, and ground coverage is 0.5 to answer that question precisely.
Sai, I would just add one thing over here. You addressed everything. One small thing that I would like to say from experience is that this gentleman should think about making a product which can be sliced up into smaller, as per the requirement. From a 5,000, 5,000 is too small, but just giving some from a 5. If you're building a 50,000, it should be from 5,000. You can 50,000 buildings can be split into 225s, 510s, or like 1050s. I'm just giving. So you need to design it in such a way that if you have a customer which wants to take 50, you can give it. If you have somebody who tomorrow comes and asks for 25, then you can split it into 225s. Then the next 25 can be split into smaller of 5 into 5. So that kind of flexibility, if you have.
Yeah, that flexibility, Hemant, I agree with you. But especially, I think his question was more to a grade tenant. So that is where, I was thinking about 50K. And as you said, splitting it makes a lot of sense, and that is possible. But your box should be designed for 50K, is what
Can I interject? There is another point to all of this. The smaller building, the smaller the size of the building that you build, your input cost is going to be higher. So my take is that you should look at anywhere between 80 to 90,000 or maybe 100,000 square feet minimum size, and then split it into two parts, like Hemant was saying, that 2 into 50 or 4 into 25. That will give him the optimum return on his investment with a cost control as well.
Absolutely, sir. Brilliant inputs from all of you. So, Kiran, I actually hope it answers that. There's not a question, an observation from one of the viewers. They say that Nirabai seems to be very innovative in his way of construction and very passionate about what he does in technical aspects. So that's a compliment of you, Nirabai. There's a question to Manish Bhai of Pragati. The question is, are you looking at moving to Tier 2 and Tier 3 cities, or are you already there? What is the scope in actually smaller towns right now?
So Amit, just to answer, we have built in past in Tier 2 cities. We have built in Jaipur, we have built in Ludhiana, we have built in some in Punjab. So that there is demand, but it has to be like clearly understood, because the demand and the amount of development you want to do, it has to be correlated, because there is a time factor in when you invest in any cities. As all of us said, that at the end of the day, your exit has to happen, because investor has to be given back the monies they have put in. We are definitely looking at it, but we will not go gaga about it, but we are definitely exploring the options, and we definitely wants to see and partner with the players who are very good in that market, and we ourselves will do some of the location where we are confident of having the demand in the cities.
Thank you, sir. So it's already about 5:36. So I'll just summarize, what we got today. So here, this is just a brief summary. I'm just trying to make it a 10-pointer. Starting with the initial takeaway, the sale versus leaseback model is very interesting. So companies that have invested in real estate and in their businesses should be concentrating on their businesses, because the ROIs that they get from their businesses are higher than the 8 to 12% that they would get on the real estate. So they would rather sell their real estate and lease it back and give an opportunity to investors. That's a brilliant takeaway. People who have been looking at ROI from built-up properties are also beginning to look at land. If land is bought at the right cost, yes, the ROIs could be planned, pretty well. The second takeaway is land is local. It has a lot of challenges. It's an opportunity for local players here. There are several issues like multiple ownerships, change of land use, lack of clarity on how long that things would take. So this brings a brilliant opportunity for a lot of local players, especially local landlords. That brings us to the third point. So there's innovative structuring available for them. There's a JV-JD model. They could get into partnerships with national players. The local players could partner with bigger players nationally, while the national players work on their expertise of construction, and the local players could handle local issues. Very, very interesting takeaway. Point number 4 is China +1 or China and beyond. 3 expectations from the government. Number 1, judicial reforms. Number 2, labor laws, and actually third, if government can give us clarity on land, because that being the raw material, if the government gets involved there, this could take India to be a superpower much faster. Point number 5, coming to leasing. Leasing is actually a B2B business, so pricing is actually very critical. There is not too much of additional brand value, but there has to be an efficient marketing, and people have to look at it long term. Moving ahead on leasing, there's a point number 6, which people say everybody is united in saying that it has to be a customer-centric approach. A very important point that Nirabhai made as point number 7 is enhance the life of your building. So if you make a better spec, rather than having a building that lasts you 20 years, it could last you 30, 35 years. So that's a good takeaway again. Specifications will definitely reduce ROI. So it comes back to quality as point number 8. But yeah, quality is long term. Sai Venkat sir also added that a quality building also gets you a quality tenant. So quality is like a 360-degree approach. So you build a better building and you also get a better tenant. It's also more long term. Moving on to point number 9. While we spoke about opportunities for landlords, there's a brilliant opportunity for brokers. These are people who actually do due diligence at the local level, as Manish Bhai said. They are the ones who can make deals happen, who can make things easy for national players to come in and do a whole lot better. Point number 10 is actually what Hemanji told us. Speculative is where the opportunity is. So if you're going to be waiting for the BTS opportunity, you perhaps may be waiting forever. And if you're going to be waiting for pre-leased, you actually could lose on your ROIs and actually returns. So work on some standardization. Of course, it doesn't work in industrial; it works in warehousing. Diversify a little bit. Get your study done clearly. Understand what's the infrastructure planned and various other factors locally, and decide where to actually go ahead. So these are the 10 takeaways of today. And I really wish to thank you all for joining us. Thank you all for your time. It's really kind of all of you that over one WhatsApp message, you all agreed to be part of this webinar. So thank you, Nirabhai, Sudarshan, who's right now not on the webinar. Thank you, Sai Venkat sir, Manish Bhai, and Hemanji. Thank you to all your EAs who actually supported us completely, and the 300 plus attendees that we have live right now. The backup teams at all the offices and everyone at all warehouses, our digital team, Gilbert, Vidya, Pooja, and everybody else. And do note that this link will be live on YouTube permanently, and anybody can return and view it at the same link at any given point on time. And for our viewers on YouTube, we've shared a free giveaway. So there is a link over there. If you just click on that, you would actually get a lot more insights on what are the challenges in land and how you can overcome them. So that's all from us. And if anybody of our speakers would like to add some final words, it is actually open to you right now.
Thank you, Amit, for this opportunity. And my suggestion is that we should make this a regular feature, at least once a quarter. Let's kind of meet over a webinar and exchange ideas and thoughts.
Absolutely, sir. We could make this, regular. Yes.
Thank you.
Thanks, Amit. Thanks, Amit, for this opportunity, Amit.
Thank you, Amit. Thank you.
Thank you, sir. Thank you all. We have a lot more information on our website, allwarehouses.in. There's a lot of content for, investors, landlords, tenants. And thank you all for joining us. And we will keep you updated soon on the second webinar. Thank you very much.
Thanks, all the speakers. See you guys. Try to make it. If you come to Chennai, we'll meet up in Chennai.
Thank you. Thank you so much.
Thank you. Thank you.
Thank you.